Hey guys. Welcome to Cuple. Please like and subscribe if you like the video.
The reintroduction of long-term capital gains (LTCG) tax in the budget sent Dale Street on a selling spree on Friday as the Sensex crashed 840 points, 2.3%, its second sharpest post-budget day fall ever by points, and closed just a tad above 35k. Bond yields rose on fears that the government might not be able to manage the fiscal deficit target, which also affected investor sentiment on the stock market. After plunging to a low of 35,006 points in late trades, the Sensex closed at 35,067 while the Nifty lost 256 points to close at 10,761. The day's session left investors pushed by Rs 4.6 lakh crore, with BSE's market capitalization now at Rs 153.7 lakh crore. In terms of market cap loss, it was the fifth worst day for Indian investors. In addition to LTCG tax and rising bond yields, lack of clarity about the applicability of LTCG tax and its grandfathering clause in case of foreign investors also led to strong selling. In a post-market conference, the government, however, clarified that all LTCG tax-related rules would apply to foreign funds also. A section of the market said the sell-off is expected to continue in the coming week as well. The worst is not behind us yet. Markets need to stabilize after such a major shakeout, said Aram Kejriwal, director of investment advisory firm Chris. It will not only take some time, but also some more value erosion, he added. Several foreign portfolio managers said they were taking a close look at the possible impact of LTCG tax on their India investments. These fund managers have in recent times banked on a stable rupee. But the burden of an extra tax could now force them to rethink their investment models, which may lead to some selling in the coming weeks, market players said. Interestingly, though, in Friday's session, foreign funds clocked a net inflow of Rs 950 crore, compared with Rs 509 crore net selling by domestic funds. There are additional concerns that some of the foreign players may shift part of their portfolio to Singapore, where the exchange is planning to launch derivative contracts on the 50 stocks that constitute NSE's Nifty index. Rising bond yields fueled global market volatility on Friday. The yield on the benchmark 10-year government securities rose to a high of 7.68%, from 7.17% when it was introduced on January 5. A rising gilt yield puts pressure on banks to hike their lending and deposit rates. Global market volatility led by rising bond yields, profit booking. Indian markets had posted a strong monthly gain before the budget, and concerns on deteriorating macroeconomic conditions were the probable reasons for the market fall, said Sandeep Kordia, EVP Strategy, Credit Securities. During the day, the sell-off in the stock market also kept the rupee weakened. It closed at 64.06 to the dollar, more than a month-low figure.